Alright, so in this video I want to review my trades for last week where I made a net profit of about $312, but I'm also going to go over some trades that a subscriber sent me. He made about 4,400 US net profit. So these are the trades I made, the ones in blue. I took it a little bit light this week because of last week's big loss. I wanted to regain some confidence. I only did one contract instead of doing two contracts. Usually I try to do two contracts. I only did one contract and I was very picky with my entry. So if we look at the first one here on Netflix, it was a put spread on Netflix at 465, 460. I opened it on Monday. Now, if we look at a chart and we look at Netflix, let's look up 5 days. You can see that Netflix was trading at around 486 and then it took a drop. So I actually placed a limit order to get it filled at 465. So it was a little bit exaggerated and then it did get filled. So that's because Netflix took a drop at towards the end of the day. But then the following day it went back up 489, 490, 495, and then even 510. And I think I closed it on Thursday for about 10 cents. Now I know that I said I would let all my trades go to expiry, because I realized that if I do no management and just let them go to expiry, I would have ended up with more profits, but it was just too good to resist. I mean, I closed Netflix for 5 cents. I opened for $1. I closed it for 5 cents. Usually I close at 50%, so I would close at 50 cents. So I did much better than closing at 50%. I decided to close maybe a little bit more than 80% profit. So it went to 5 cents, and obviously Netflix closed at 503. So definitely my trade would have expired worthless. Regardless, I closed for 5 cents, and after commissions ended up with $82 net profit. Could have been $95 if I let it expire worthless. Same day on Monday, I opened a call spread on Amazon because Amazon was running up. So I decided to sell on the top side. I like to sell against the trend. Could be dangerous sometimes, but I like to sell against the trend. If something goes up, I feel like, okay, it's not going to continue going up, or at least it's not going to go up at the same pace. It might die down or drop back a little bit. So I sold a call spread, an out of the money call spread at 32.85, 32.90, collected 90 cents. Once again, this would have expired worthless, but I ended up closing it for 30 cents, I believe, on Thursday, because I saw Amazon go to 32.10. So it reached the 3200, it scared me a little bit. Why not just close it for a profit? Close it for more than 50% anyways, so that it's better than closing for 50%. And yes, I should have gone to expiry like I promised myself, but it was a little bit hard to resist. And then on Tuesday, when Zoom fell, I sold a put spread on Zoom at 450. This one Zoom dropped all the way to 468, about 466. When I opened this trade, Zoom was trading at around 485. So it still came close, but I held on to it. I didn't manage it. I didn't do anything. What I should have done is sold more Zoom put spreads lower, maybe at around 440 when it dropped it to the 460s. I collected $1, and this was a limit order. So I just placed it and I said to myself, if Zoom drops a little bit, this will get filled. And Zoom did in fact drop and it got filled. I ended up closing it for 20 cents. I could have let it expire worthless. Zoom ended up closing on Friday in the 480s. So this would have expired worthless. So the good thing is I closed for more than 50%. The bad thing is I didn't stick to my plan of not touching them and letting them expire worthless. The other bad thing is I only did one contract. Regardless, I had a net profit of $312. And this first one here is a naked put that I rolled on Rocket. Now I shouldn't include it because it's a roll. The trade is still open, but I included it last week in my loss. It was a 176 loss because I had to close it for a loss and then reopen it for a net credit. So I decided to include it as well, just for presentation purposes. So I included it this time. It's a 116 confirmed profit. So on paper, it's actually a confirmed profit, but because I'm still in the trade, you don't know if I'm going to win or lose on this trade here. So I closed it for, so last week I closed it for 165, but I opened a new trade for 317. Now this trade that I opened for 317, I closed for 189. So it gives me a profit of $1.28. But I opened another one for $2.84. So So I actually had a net credit of the difference here, 284 minus $1.89, so almost 90 cents was my credit for rolling the put. So now this trade is still open, and I actually went a strike lower. So I went from the 23 short put to the 22 short put, and I was still able to collect the credit, but I went till November 20th. So I went all the way to the next monthly expiration. I did that so I don't have to worry about it much, and I just want to close it next time I get the chance, or maybe just let it expire worthless November 20th and keep the full $2.84. Now Friday I open trades for next Friday. So on Friday I open trades for Friday, October 9th, and I couldn't resist because the market dropped. I like selling put spreads when markets drop. So I sold Netflix, I sold Adobe, I sold Amazon, I sold Tesla. Now Netflix dropped even past my entry. Expected move for Netflix was about 30 points, and now I'm only 10 or 15 points away because Netflix closed at 503. I'm actually just 13 points away. Netflix dropped even more after my trade went in. Got Adobe as well at 465. I've got Amazon at 3000. I think Amazon is good. I think it's the safest one amongst them. And I've got Tesla at 385. Collected 90 cents, 90 cents, a dollar. And I went back to doing 2 contracts. Now we'll see what happens. Hopefully the Trump issue doesn't affect the market much. And if it doesn't, hopefully nothing else comes up that affects the market much. We'll see. Now, if the market continues to drop, I haven't decided what I'll do. If I'll just hold on to it. It's a little dangerous to hold on to it because if they all go bad, I'm out almost $800 on each, right? Because this is 5-point wide, collected 90 cents, so the difference is my loss. If Netflix closes at below 485 come Friday, then I lose $4.10 times 2 contracts. Same thing for this one, same thing for this one, same thing for this one. So I kind of have to manage it, but I'm just not sure at which stage I'll manage it. I could probably close it if it reaches 3 times the credit. So this way I limit my loss, but I would definitely open another put spread lower. So if Netflix goes to 470, for example, I'll try to close this for 3 times the credit received. So I'll lose $1.80 times 2 contracts, but I'll definitely open a new put spread on Netflix at 450, 445. So that new put spread has an even better chance of winning. And if we go back to my trades here, if I were to do the two contracts that I normally do, let's just look at the profit I would have had. So it would have been a profit of 538 net US. So that would have been decent. That would be close to my target if I had just done 2 contracts, but I chickened out. I wanted to be a little bit safer, conservative, just trying to gain some confidence again. And I also only did 3 trades. I definitely had more opportunities to trade. I think ZM could have done another put spread on ZM. Could have done a put spread on Tesla, of course. Missed out. Kept trying to time the best entry, but it never came. And the earning trades for this week weren't anything interesting. Premiums weren't high enough. I was going to do a put spread on Constellation Brands, but premiums dropped a lot towards the end. So they didn't do anything with earnings last week. Next week, though, I do plan on doing an out of the money put spread on Domino's Pizza. It has earnings, I think, Thursday before the open. So most likely Wednesday, end of day, I'll open a put spread, an out of the money put spread on Domino's Pizza at expected move. I think expected move is about 30 points, so that's a good one. Alright, so now let's look at the trades that the subscriber sent me, where he made 4,400 net profit for the week. So these are not all his trades. I'm missing a few Monday trades, but doesn't matter. We don't have to go through all of them. You'll get the idea. They're mostly all the same type. So on Monday, he did have a Netflix put spread as well, the same as mine, maybe just a little bit higher. You could see on Monday as well here, if we just look at the open date Monday, he opened a put spread on Zoom as well. Even lower than mine. I had a 450 strike. He had a 447.5 strike. Collected 87 cents. But he did 5 contracts. I did 1 contract. So you could see the difference starts right there. But the number of contracts is definitely more risk. But if you're confident of your entry and confident of your management style, why not? And I think as well on Monday he had put spreads on Amazon as well. And Tesla, of course, at 385, I believe. On Tuesday, he opened another put spread on Zoom because it dropped some more. So he went at a 440 strike. So only 7.5 points lower than his original put spread. So I like to open, if I open a new put spread, it's only if my original put spread got breached to really give that chance that my second put spread to be a much bigger winner. But definitely if Zoom just dropped a little bit and then comes back up, it's definitely a good opportunity So in this case, I definitely missed out on this opportunity by not selling another put spread on Zoom when it dropped. Now you've got a call spread on Shopify over here on Tuesday. Shopify moved up hard, sold a call spread at 1045, 1050. Now I almost did the same trade, but I normally don't like call spreads, and I know that because I know stocks usually have the ability to run up, and Shopify especially. Now Shopify did end up closing below 1045, so that call spread, if it was held till expiration, now it ended up becoming a winner because at expiration it expired below 1045, but obviously when you're in the trade you don't know it. But as it was getting tested, he sold another call spread at 1060 and then sold another one at 1070 on Friday when the market opened, knowing that the market, everything was going to drop. Took more risk on the one that he opened on Friday, 10-point wide, 4 contracts. So that's $4,000 of capital required minus the $1 collected. So about $3,600 of capital required for that trade. So as you can see, he's taking a lot of risk per trade. He's putting a lot of contracts, putting a lot of capital on the line, but he's making strategic bets. He's got directional assumptions, and he's playing, and he's using out of the money credit spreads with his directional assumptions, and he seems to be getting them pretty much right. See, on Tuesday you could see he sold a put spread on Nvidia. That was a good one. I think Nvidia didn't drop much, but he still had an assumption that it would go up, and he was able to close it for 5 cents. Opened it for 84 cents, did 4 contracts. So once again, at 5-point wide, so times 4, that's about $2,000 of capital minus the premium collected. He did a put spread on Zoom at 450. I had the same one. I think I collected $1 on mine. Yeah, he did 3 contracts, and then he played a put spread on STZ, an earnings trade, 180, 177.5. Opened it for 36 cents, closed it for 15 cents, did 5 contracts. Ended up giving him a profit of 105. On Tuesday, did an Amazon put spread, 3080, 3085. See, I probably would not have done that trade because Amazon was going up. I don't like selling put spreads on stocks that are going up because I assume that they're probably going to die down or someone's going to take profits and they're going to drop. I prefer to sell put spreads when something drops, assuming that it's not going to drop forever. It's going to come back up again. Did 3 contracts on that one, and then on Wednesday sold a put spread on Shopify. I think Shopify was going up on Wednesday, so this was probably used as a mitigation towards his call spread, and he collected $1 on that one and ended up closing it for 11 cents. So ended up being a very profitable trade, I guess, because Shopify kept going higher. Did 3 contracts, profit of 267. Did a PayPal put spread on Tuesday. I was actually looking at PayPal because it had high IV, but I didn't feel like I was going far enough. I think it was expected move was only $10 or even less. So I didn't do it, but I guess he liked the trade, went for it, 2.5 points wide, 4 contracts. So it's like 2 contracts, 5-point wide. So about $1,000 capital only, 37 cents. Ended up closing it for 5 cents, making a $128 profit. And then on Thursday, opened a Shopify call spread. I guess that's a lot of Shopify spreads actually. So I guess when Shopify kept going higher, he sold an even higher put spread. So he's got a 1045, he's got a 1060, he's got a 1070 was on Friday, but on Thursday he opened a 1080. So that was a good one. I think that's as far as he went. For $1, closed it for 36 cents. That's a pretty good deal. And did 3 contracts, $192 profit. So you've got the Shopify call spread. The original one at 1045 ended up closing it for a loss. So that's good, controlling your risk. Didn't feel confident about this trade, so I ended up closing it for a loss before it got too big. Not so bad. Lost only $69. And then this call spread here was able to make a profit from it. This call spread on Shopify at 1070 made a profit as well. And this is Friday, opened Friday, closed Friday. So this is same day, $384. That's funny. On Friday, looks like on Friday he made most of his profit actually. So this trade was open on Friday. This was open on Friday, 350, 320, and then $90 loss here. But then 384 profit over here, and then Tesla 355. He's got some pretty decent gains just on Friday alone. So this Tesla put spread was open on Friday. That's it's a pretty good trade. I think he was fast on this trade because Tesla opened low but then moved up really quickly. So he got in at a 415 put spread, collected 81 cents, did 5 contracts. So that's about $4,000. So that's about $2,500 of capital required. And he actually closed it for 10 cents a little bit later. And good thing he did, because Tesla ended up closing at 411. So if he had held to expiry, this trade would have been a $3 loss. So it's a good thing that he took profit at a very good price, actually, at 10 cents. Made $355. Friday, he opened this put spread on Shopify at 10.20, 10.25, I guess, because his call spreads were getting tested, but he ended up closing it for $1. Opened for 70 cents, closed it for $1. So for a small loss, I guess Shopify dropped like everything else. So on Monday was a Zoom put spread. I guess when Zoom dropped even more, he sold lower put spreads, 447.5, 440 again on Tuesday. That's a good idea. So he had an original put spread on 450, but then when the market dropped some more, he sold some more put spread on the same underlying. Usually I'll do that. Personally, I'll do that when the original put spread gets breached. So if Zoom got breached at 450, then I will sell another put spread at 435, for example. So much lower, giving it a stronger chance of winning. And actually, he almost caught that one. It's the 440 over here. But 440 is only 10 points away from 450. So it's not that, it is safer, but not by that much. So regardless, as you can see, he's making assumptions and he's just going for it. He's got an assumption, he just places the trade right away, doesn't think about it. And then this buy put spread was a 0 days till expiration, 32 cents, collected 32 cents, 5-point wide. But this type of trade requires you to be watching the market all day, because you cannot let it go to max loss. In fact, if the plan with this trade is if it reaches 3 times the credit received, you get out, you take the loss. But most of the time, probabilities are higher that this trade ends up expiring worthless. I think based on, I did some back testing, I think a little bit over 80% of the time, the 0 DTE trade on SPY ends up being a winner. And then 20% of the time, if you book the loss at 3 times the credit received, then that'll happen about 20% of the time. So if 80% of the time you can make $500 and 20% of the time you lose $1,000, you still end up profitable, because 80% of 500 is higher than 20% of 1,000. Now, if you had done this trade at the open, it was trading between 47 and 50 cents. He made this trade a little bit later, still went for it, so that's amazing, even if it was trading for less. It ended up dropping to almost 10 cents and then went back up to 30 cents. Still held on to the trade till expiry and ended up expiring worthless. So made a profit of $320 just on that one alone. So just from Friday open to Friday close, just the trades he made on Friday, we've got 350, 320, so about 700. And then on Friday lost 90, and then this one at 384, so about 900 up, and now 1100. And then Tesla about 1200 up. So just on Friday, trades that he opened and closed on Friday, he's about $1,300 net US. But obviously took a lot of risk. So if you count all the contracts and you assume about five points for every contract, he's using maybe almost not more than $30,000 of capital for all these trades combined. So 4405 divided by 30,000 is about a 14% return on capital. Now, which trades would I have done myself? So Friday, Amazon call spread, I would not have done that, never, because it's the same day and Amazon can jump up, and I wouldn't be able to, I would only do it if my plan is to close the trade if it reaches 3 times the credit. So I would not hold till expiry, but if my plan is to close it, if I give myself a mental stop loss, then maybe I would do it. But generally speaking, I would not do this trade. This buy put spread, same expiration. I've actually talked about this trade in March. I've got several videos on it. I said that this would be the only trade to make during market crashes because you're in and out the same day. You don't deal with overnight risk. And because VIX is so high, you can actually go pretty low, pretty far on the short strike of the put spread, collect a decent premium. And like I said, more than 80% of the time, these trades do win. But you still need a plan, an exit plan, in case they go against you. And I think obviously the exit plan would be to stop your loss at about 3 times the credit received. This Zoom put spread, definitely I would have done. I actually did it, but I did it at 450. I'm not sure if I would have done more at the same time without my initial put spread being tested, but definitely these put spreads on Zoom I would have done. Shopify put spread on Friday, I would not have done that. Shopify call spread on Friday, I would not have done either. On Tuesday, Shopify call spread, I was going to do the 1045 and I chickened out. And then when I saw Shopify above 1050, and then I strongly considered doing this call spread here at 1080. But then I said to myself, well, I give myself the stress. I know Shopify can fly. I don't normally do well with call spreads, so I decided not to do it. This Friday, Tesla put spread, same day expiry, I was actually trying to get in. I had an order placed, but I was trying to get a better entry, but Tesla decided to fly, so I missed out on it, but I was trying to get in on it. So this one definitely I would have done. PayPal, I thought about it same day, but I felt like it wasn't far enough, so I just passed on it. This Shopify put spread I would not have done because I just saw Shopify going up, so I don't like selling put spreads on stocks that are going up. Amazon put spread, same thing, I would not have done. STZ, earnings trade, I would not have done either because it wasn't enough premiums. I was thinking about it, but it wasn't enough premiums. And Zoom, of course, I would have done, and Nvidia I would have done as well. But definitely would not have done these many contracts. I would have done 2 contracts each. I would try to make each trade the same amount of risk, so every trade is equal. Because you would hate to do 10 contracts on a trade and it ends up being the trade that goes bad and just ruins everything else. Alright, so I hope you enjoyed these trades. If you have any questions, leave them in the comment section below. Any feedback as well, leave them in the comment section below. Like always, if you're going to open an account with Questrade to trade on the stock market, use my referral link below to get $50 in free trades. If you enjoyed this video, click the like button, share with a friend, and subscribe to the channel. Thanks for watching.